After last week's wild roller coaster ride where we saw GDP absolutely fall off the face of the earth in Q1, only for non-farm payrolls to bail it out on Friday, we ended the week where interest rates were actually higher and it looked like it was going to be an absolute positive week for them. So what are we going to talk about looking at the week ahead? We're going to talk about the Fed. Their policy meeting is on Wednesday. We're going to talk about is growth continuing. We have manufacturing numbers that are going to be coming out. We're going to talk about more evidence. The biggest thing that I'm seeing is traders need more evidence at the moment, right? We're seeing a lot of conflicting stuff. So I want to discuss that real quick. What set the stage last week of a data set that comes out every week, and I think it could be a market mover moving forward. And the other things I want to discuss is numbers don't lie. So we want to address that, the elephant in the room. And then lastly, just positivity and encouragement. So let's dive in on what is going to be the biggest news of the week. And once again, it's going to be the Fed policy meeting. And I'm here to tell you, I've been telling you now since the beginning of the year, they're not going to do a damn thing tomorrow. They're not changing the Fed funds rate. There still remains a lot of uncertainty. But however, the biggest thing is going to be what is the press conference with Fed Chairman Powell. And let's be honest, Trump and Powell don't like each other. So the fact that I believe tariffs are still going to be an uncertain, I think he's going to say that the labor market, while it was refreshing to see that number, it may be only a one-off. So they want to be very alert and attuned to that. And that GDP number is absolutely extremely concerning to them. But the fear of inflation is still present with the tariffs. However, what I think his overall message is going to be is clearly that we are still in a major environment of uncertainty, and I think that's going to move rates down. So that is something that you really want to watch for on Wednesday. Early comes the Fed policy meeting. Once again, it's not going to be anything. And again, I'll tell you here, I don't think they're going to do the first change until September. They are going to mimic last year with their first rate cut. Mixed signals. Do we get more signals of a slowing economy? With last week's number where GDP actually turned negative for Q1, it really had investors very concerned of, are we already in a recession? How much further could it drop with tariffs? Only to see non-farm payrolls just actually stomp the forecasted numbers by about 40,000, which spiked interest rates. And it spiked them simply because if you have more people bringing on labor, that means there's more demand. That means that people are going to have more spending power. That's going to mean more dollars chasing goods, and it's going to limit the level of the recession that we're in. So maybe the economy is not slowing down as much. The other thing we're going to get a clear look at is these manufacturing numbers. What does the ISM manufacturing numbers say? Is it a positive? Also on the pricing side, does it show that there could possibly be raising inflation? And the other thing that we have that's kind of one of those things that's sitting out there is we do have treasury auctions, specifically the 10-year, and it's going to be interesting to see what type of demand, what type of appetite traders have for that. Last week set the stage, and like I just said, GDP really set the stage for what I believe for the next several months. The remainder of Q2 for sure, and I'm not sure how far into Q3, but initial jobless claims on a weekly basis is something that I think traders are going to start taking a little bit more and just pay attention to a little bit more. It's going to give a little bit of an indication because that number's actually been pretty good. Every week it's been beaten, the data, the forecast. So one would then expect that possibly Friday's number, which I thought was going to come in at forecast, if not a little bit lower, so shame on me, I had it wrong, that number was going to be a little bit better than expected. So I think the traders are going to pay a little bit more attention to that, give it a little bit more weight, and I think it's something that could move the market on a weekly basis, especially because you have that Fed policy meeting on Wednesday, you're going to get the statement, and then you're going to get that initial jobless claim. So if we see a reversal in what we thought was happening with jobs, I think once again, you're going to see interest rates drop. And then what I really see happening right now is because of this mixed data, we're getting that GDP number. Economy is clearly slowing. Oh my Lord. To only then get that non-farm payroll number, there's still a lot of just seesawing in data. And what traders are looking for is a little bit more evidence of a slowing economy. That's what the Fed's been preaching. That is what the Fed is saying is what they're keeping their closest eye on. Inflation kind of took a back seat. So they're saying, well, you have all this misinformation, like not misinformation, but conflicting data. What the hell do we have to do? When is it all going to lean one way? When are we going to get a clear indication? Because what you're having right now is you're having this range. You're having this battle between about 4.2% and 4.4% on that treasury. And that swing can be pretty significant in interest rates. It could be anywhere from, an eighth to probably a half a point at times, depending on your credit score. And every individual is different. So this is by no means any suggestion on lending. It would be something that we'd always have to dive in and look at your personal situation. The other thing I want to talk about is numbers don't lie. There's no mistaking that you're seeing on a national level that the real estate numbers, existing home sales, pending new home sales, all those things are way down from where they were year over year. It's obvious that the consumer is under pressure from the notion that these tariffs, because that's what they've been told, is going to have just a huge negative effect on the overall economy. It's going to create major layoffs, it's going to spike inflation, and so on and so forth. And I'm even hearing it from past clients, just overly concerned about their job security. And what I'm trying to point out is clients now need a reason. It's no longer good to just say, hey, it's a great time to buy a house, and houses are less than they've ever been. They need real data. They want to know where they went from a year ago. They want to know how long potentially that this could last. They want to know specifically for their zip code what has been the change in pricing in home value. You got to get really specific with them. You cannot just rely on the fact that, oh, now's a great time to buy a house. I see it constantly from real estate agents, and I want to reach out to every single one of them and say, what's the value in that statement? Why are you making that statement? Because if you're just reading the national press, Austin is a declining market, so therefore, why would you jump in right now? Especially with all the other noise that we've been told. That it's going to be a slowing economy, that inflation is going to spike, that there's a huge unknown for tariffs. Oh my God, look out. Why would you make a move? You need to build that case. So that is something I want to stress. And the other thing we need to do is just positivity and encouragement. They absolutely go a long way. If you have a client that's in the market, you need to help them to not get discouraged, to not basically fall on the fact that, wow, I've written so many offers. I've written 4 offers, 5 offers. It's not working. My house hasn't sold. It's been 60 days. You need to help educate them on how long and be upfront with them and honest with them about how long it's taking precisely in their zip code, precisely in their neighborhood on the market. What is selling and what is not? What is the condition of the home? You need to dive in and you need to give them encouragement and positivity. Because if you're not reaching out to them on the weekly, if not at least twice a week, and helping them and keeping them upbeat and keeping them encouraged to move forward in this marketplace, because if you stay with it, there is no question that it will sell if it's priced right. That is first and foremost. It needs to be priced right for the condition that it's in, and either it will, if you're selling, it'll move, and if you're buying it, it'll move. So that's the message of the week. Remember, once again, the Fed policy meeting is on Wednesday, and the biggest suggestion I give, and the biggest message I want to leave everybody with is make sure you're shopping, right? Make sure you're in touch with a mortgage professional that's giving you good advice on what's going on in the market on the daily and when to lock in these lows. We're seeing the continued peak and valleys, and maybe they may not be as drastic during your 30-day window to lock in a rate or 21-day window. However, they are happening. It's happening every 21 days, every 14 days. We're seeing peaks and valleys of when we should lock in those interest rates. So you want to make sure that you're taking the time, you're spending the time to make sure that you save hundreds and thousands of dollars over the life of your loan. And if you're an agent, make sure you're putting them in touch with a great professional. Right here. All right, y'all, have a great week. You need anything as usual, pre-approvals, you want a flyer, you need anything, you have a question for your general client, or you want to sit down and understand how people in my position make money, how people in my position price out loans so you can be a better asset to your client, I'd love to sit down and do that with you. All right, y'all, have a great week. Like I said, I'll be coming to you every day with a daily dose. Please do not hesitate to subscribe to the YouTube channel, The Mortgage Mouth. That is my sidekick name, dropping content on the daily to make sure that you don't miss a beat and you're in the know. All right, y'all, cheers.